Welcome to the channel. Today I'm going to be doing a deep dive into Palantir, just cover it up. I've done a lot of due diligence on it. This is why I haven't posted in so long, and with work and stuff I couldn't. So I'll just go into the basics. So it's currently trading at 300 billion. You also have it on the screen here. 32 billion. The P ratio is at around 148, which is huge. So as a value investor, it's one of those companies where you're like, I'm not even going to consider it. But then when you do consider it, you're like, okay. It's down 29% year to date, almost 30. Oh no, 24 year to date, and 26 in the past 6 months. Um, it's Palantir is a SaaS company. It has a software suite, so it has Gotham for governmental, it has Foundry for commercial, so for like corporations and such. And on top of that, you have AIP, which is their agents, AI agents and workflow, which is upon both Gotham and Foundry, and they have Apollo, which is for the software deployment and the new additions, like new updates and such, into both of those. So this is their four segments. We're not gonna go into Apollo because it's software deployment and updates, and so it's not like a revenue generating. There's nothing really. It does help because it's a part of it, but the way that I described it is perfectly fine for your understanding to understand this company as an investor. Next, the AI agents and workflow. I mean, we might touch upon it a little bit more, but I just want to go the main things that you need to know, because those are add-on. They're upon the platform, so it's Gotham and Foundry. Um, just to give you a bit of an history as well, Palantir is a company that was backed by IQT, which is the CIA's non-profit venture capitalist fund. Um, it's non it's like not for profit. It's essentially for to develop new technologies and such into the defense system, and so that was Palantir came about after 2001 as a way to try to not have um, like a 2001 event happen again, like I said, 9/11. And so that's what like started Palantir. And Palantir, what it is at first, at its origin point, it's a company that turns scattered data of company, like data that's all over the place, into actionables in and that's in multiple realms. So it can be in their logistics, it can be in their direct call, whatever, like in governmental branches it is in multiple one of them. So in intelligence, in logistics, etc., like in war, like in artillery, whatever. So that's what it does. And the company had, when it first started, it's kind of on it went down a lot because I don't know, it wasn't looked at as a company that can really achieve much with the technology at the time. But since the LLMs, it has skyrocketed. And not only that, but the value it offers now compared to prior is ridiculous as an LLM with LLMs. It's like the most simple thesis of it is that Palantir has the best possible use of LLM for governmental and also corporations, and that's why, like, as long as LLMs are there, they'll only get better. To be honest, Palantir is only going to get better as well. So that's what it is. Um, what else is there to know? Okay, so AIP is the integration of LLMs on top of like AI agents on top of Gotham and Foundry ecosystem, and Apple is what deliver the updates autonomously. Is that interesting? What they say, okay, I have like a graphic that I made to myself to be able to explain it, is that an engineer merged code once in Apollo, and in Apollo essentially delivers it to the different solutions that they have. So their public cloud, so AWS, Azure clients, on-prem, so like clients that have on-premise Palantir solutions, devices such as cars, ships, whatever it's on, and even in like classified nets for like governmental companies that have like air gap classified um, type of the ecosystem in which they work essentially is around like classified data and such, so it adds it onto this kind of on all of these. The moat for me, and it's kind of like it touches back at what I touched before. Also, I have my papers that I have like wrote a lot of due diligence, so if you see me look down, it's because of that. It's been a few days, so all my brain's all over Palantir. I even did a discounted cash flow analysis that you can see top right corner a little bit, that I'll touch at the end of the video. So Palantir has been built to operate within intelligence agencies at first. That's the moat, kind of my thing. So it's been at its fundamental point, it has been built to handle classified data. Is built in, and now it works on top of LLM for decision making, which has improved its accuracy. And unlike, so now you can think of like, okay, so Palantir does that, and then so why is it different than like another AI agent solution like with ServiceNow, or like with even like Copilot, whatever it is? The biggest thing is that unlike a Copilot agent, it's that ontology sets up as like as a form of data filter. Okay, so what we were talking about, that it turns scattered data into actionables. So it kind of adds the data that can be acted upon, it kind of turns that, and then the AI agents attack this problem with this smaller amount of data that is pertinent. But when you look at a Copilot, for example, the big difference is that it's gonna kind of be within all of the data, and all of this is gonna have to try to figure it out. And so the compute that it's gonna use compared to a Palantir is gonna be, there's gonna be a ridiculous difference, and also the accuracy is simply gonna be better on Palantir. And also the classified aspect of it is so big, because all, you think of classified, you think of the CIA or whatever, like a governmental operation, but you don't, like, every corporation works within a classified to a certain extent. Like, no one can know what they're working on, the data that they're operating on. And so when Claude is like open to everyone and these kind of things are not clear, you have Palantir that's model agnostic. So within Palantir, you can use Claude, you can use ChatGPT, you can use whatever model you want to use. But you also have that classified thing where Palantir makes sure that your data will never leak in any way, shape, or form. All of the Palantir is like a guarantee to a certain extent when it comes to being classified, like to your information that cannot be put out there. And it also works as a data filter and stuff. It's like the application layer to the LLMs that is built perfectly to operate on top of the LLMs, is the way that I kind of look at it, and the way you should look at it. So as long as AI can treat, and now there's been this thing where Palantir has traded down as like the chips and whatever, etc., because it's a software company, so it traded down with the software, didn't trade as down with the other ones. But I mean, down 29%. Granted, it's a company with a PE ratio of 150 right now, which is so like it makes sense, but it still went down by a lot. It's been up to $200. The peak that it touched, I think, is 207, something like that. So, I mean, um, yeah, it's dropped by a lot. And right now, I love these prices. I am an investor in Palantir. I have around 4% of my portfolio, something like that, in it, which is not a big position. But as it keeps dropping, I had it some today, I had some yesterday. I'm gonna keep adding some, uh, and I'll add a lot if it goes below 100. If it goes to 100, 110 range, I'm adding a lot of money in Palantir. Um, it's my thesis. Now, when it comes to Foundry, just to go into their corporate solution, then we'll also look at their latest earnings, and we'll do the DCF. So Foundry, they have Airbus Skywise, which is one of the most interesting ones they have. It calculates so many different things with the Airbus. Makes the it essentially operates Airbus, which is like a um, flight company, airline company, and what they do with their Skywise solution, which is run up on Foundry, is like they'll calculate everything for the in plane right now to uh, all of the other fleets. Where are they going? This and that, and it's essentially like an optimizer for the amount of flight that it can take a day. It also looks at like the safety currently of the flight and what's happening right now, its trajectory, all of these things, as well as all of the logistics aspect of it and the management of when the flights are going to go and for days prior and such to like what time this flight's going to happen, this that it when if you want to look at it, because I don't want to deep dive into like a singular solution for like Skywise and such. I have looked into it. It's very hard to explain, but you can ask honestly. You can ask Claude to like build you a graphic of what Foundry does for Airbus with the Skywise solution, and you can ask it to build you a graphic. You'll see it's quite insane. It is. You're like, okay, that makes sense. An LLM cannot do that on its own. It's really the application layer is very, very important with Palantir. Um, they even have Cleveland Clinics, which operates in a way where it's going to tell you which bed is going to be more likely to be open by that time, etc., so that they can like assign new bed to new patients and all of this. It's like optimized operations, even in something as manual as like an hospital. They have Southern California, the client, Traffic Euro, which is a transport company for shipping with the camion, like big trucks. Tucson, Athenia, which are other like logistics and I can't remember what the other one is, but they're deployed in all of these different industry, and what they do is they turn like your data into actionables, and so they help operate. Palantir does not tell you what you want to hear like a normal LLM. It gives you actionables, which is the like if you make it operate into your company, think of it that way. If you make it operate within your company right now, it's going to tell you where to cut costs, where to like allocate more people towards, where to do this, where to do that. It's going to tell you so that your company can grow. That's what happened. And we're going to go into the stickiness into this because you might think, okay, this sounds like a little bit too good to be true. To the stickiness aspect of it, their net dollar retention in Q1 of 2026 was 150% year over year, which means that clients that have stayed have on average spent 50% more than they have in the year before. ServiceNow in comparison has 125%, so they're 25% above ServiceNow. And as the industry standards, anything over 120% is considered exceptional. And Palantir grew from around 128% like last year. So this year's was 150, last year was 128 net dollar retention. So like their net dollar retention has been growing, and it grew from the year prior as well. Is it at peak right now? It's not clear to me. I don't know. But 150 is super, super high, so it could be. So next, we'll just look at the 2021 earning. 2026 Q1 earning. Together. I've looked at this. So the first thing is their rule of 50. So rule of 50 calculate revenue growth and margins, and it adds them, and what it's supposed to be is above 40. So let's say you have 20% revenue growth and 20% margins, then you're at the rule of 40. So you look at Apple, they're at 52, Amazon 32. Amazon doesn't have the greatest margin because it's it's like Walmart, Palantir has 145%. It's only below Micron and SK Hynix. It's very close to Nvidia, but Nvidia's earnings have been known to be absolutely ridiculous, and they have great margins because they have pricing power. Palantir is the same way. It has 145, and that's 68% margin and 60. I think they have like something like 80% of revenue. Let's see. We'll see here. Revenue grew 85%. And their adjusted operating income, 60% margin. So they have 60% margins and 85% revenue growth year over year, which is why they have 145%. Here you have U.S. revenue, which accounts for about 78.5% of their whole revenue, is up 104% year over year and 19% quarter over quarter. Okay. U.S. commercial grew 133% and government grew 84%. So the government part is growing less, but their U.S. commercial is growing a lot more. Just insane, 104%. And it's becoming more and more. It's like a bigger and bigger part of it. Rule of 40, close 200 deal of at least 72 of at least 5 million, 47 of at least 10 million. That's good, but we have to see like what it was before, because those data are kind of like, you have to compare it to what it was like the prior quarters. Adjusted free cash flow of 925 million, 57% margin, operating income. Okay. Let's see, was there something else? Okay. All right, load bearing. So this is their new solutions. They had an NVIDIA deal. Mothers using AIP to modernize home lending. That's telling you like new clients that they have, or like different deal they've made, kept, etc. Because Airbus has been for a bit. Yeah, for a decade now. Let's see. Okay, they work with farmers as well. Okay. Yeah, they have the NVIDIA deal, which is very interesting. So here, AIP continues to drive U.S. commercial momentum. That's what we saw earlier. U.S. commercial remaining deal value plus 112% year over year. That's interesting. Okay. Net gap income. So do you see this growth? They've accelerated growth here. From Q3 of 2025 to Q4, quarter over quarter, they've reaccelerated growth. And it's 4x in the past, like from Q1 2026 to Q1, like Q1 2025 to Q1 2026, 4x their net income. Same for their operating income. For the U.S. commercial grew from 628 to 1.28, over 104%. U.S. commercial grew from 255 to 595. And if you think about these numbers, they're really not that big, in the sense that the growth is insane. But think about their total addressable market as a software company that operates in workflow with AI agents and operates both in governmental with Gotham and in commercial with Foundry. Their total addressable market is ridiculously bigger than what they have access to right now. U.S. government revenue growth, commercial revenue growth. That's overall. So that's not just that includes. I think they work with Ukraine, Israel, not. Yeah, it's whatever. By the way, I'm not. I think that some of the things that they do are absolutely atrocious. As a company, so I'm not. So if you have like a moral situation against Palantir and so you can't invest in them, that's totally understandable. I unfortunately don't operate morally with my investment. I simply look at the math and I go towards what makes the most sense to allocate my capital into. Yeah, this is it. So this is not me telling you that Palantir's a company that's good for humanity and such. It's just me telling you that their numbers are very, very good, and that's what it's about at the end of the day when it comes to investing, So U.S. commercial revenue growth here, U.S. government revenue growth. So even including the other companies, which have grown around 26%. 26% internationally. Yep, 774.85 for a total of 1.6 billion, which is 85% revenue growth. And well, I'll talk about this after. We continue to invest aggressively in AIP and into US while driving operating leverage at scale, which is clearly their margins have always gotten better and better, which that's phenomenal. 60% margins is incredible margins. U.S. commercial customer count. Yeah. So it's 42% year over year that they've grown into the amount of people that they serve with their thing. And they also have crazy amount of net dollar retention per client. So customer count. So is that US? And overall is 31%. And commercial, 34%. To 832, 615 in the US. Customer account total is 1,007. And commercial is 832. That's good. 206 kills. Okay, but what were the ones before though? Because that's insane numbers. That's 470 million. At least. But what was the numbers from the prior? Anyways, I'm not gonna go look at it, but it's still phenomenal numbers for a company of that size. It's just that because it trades at such a high PE ratio, it's a $300 billion company at this point. And Q1 2026 with 8 billion in adjusted free cash flow. Insane. adjusted free cash flow. Or you have Q2 their revenue expectation for the second quarter. They're at 1.2. Wait, aren't they at 1.28? Nah, they're at 1.63, right? It was right above, but I'm just gonna look here. 1.63 of revenue. So they're expecting to go to 1.8. And by the way, they always beat. They have beaten 14 times consecutively. No, 11 times consecutively, sorry. That they've beaten quarter over quarter. They're expected, so they're gonna hit over 1.8, and they're expecting to do their first $1 billion quarter, which is now they've done 856. Now they're expecting to go 200 million more, or 200 million more. So that's great. Their full year 2026, they expect to make 7.6 billion in revenue. They expect to make 4.4 in free cash flow. They expect commercial revenue 4.2 to 4.4, adjusted income, commercial revenue in excess of 3.2 billion, representing a growth rate of at least 120%. That's what they think. So that's insane. So that's their remaining performance obligations. Total RPO, short-term RPO. That's great. That is a very, very good long-term RPO. I'm sure that clients will renew and such. So that's still great. And they already have, like, in long-term RPO, they have a 95. Well, 950 million. See, they keep accelerating. Year-over-year revenue growth has only accelerated. But for next quarter, analysts expect it to go to like 60% revenue growth, which I'm kind of perplexed about. I'm wondering how that's gonna happen. 60 or 65, I think that they're expecting, which is why I find myself, when I look at this company, I'm like, look, this is their rule of 40. It was at 94 in Q2 of 2025, 83 here, and here it's at 145. Their margin has only accelerated. I think that they're going to maintain similar growth to that 85. And that's what Alex Karp also thinks. Okay. When you look, Alex Karp has said that they'll double US commercial and US governmental in 2027. That was a statement that he made. And he also made a crazy statement, okay? And you'll see in my free cash flow analysis that I didn't use those numbers at all, because else it would be insane. He said that in the next 2 years, you're looking at 15 to 18 billion of free cash flow. Okay? Which is absolutely ridiculous. If they do pull that off, which I think they really can. If they keep growing at that rate, they just have to do, I calculated it, and from their 2026 full year expectations, well, at that 4.4 billion, they'd need 85% and 85% both years to grow. They've done 85% growth at 60% margin. If they do 80% at 65 margin on average, they'll be fine, etc. So I think that they'll be all right. I think that they'll be able to make it happen. I do think that it is a bullish outlook, but I don't look, that's what we're expecting. Analysts are also expecting them to go there, and they've beat all the time that analysts have expected something like that. They're gonna beat again. They're gonna keep beating. They'll end up with 5 billion. Then it'll be like they'll only need to do 73% or whatever. I think they'll make it happen, but I don't want to calculate that into my discounted cash flow, because that's super, super bullish. I want to do one that I believe in. And that's how we're going into the okay, let me do this. Let me do this because I still want, I'm not the most prepared when I do this. Okay. All right. Now let me make it this bigger. So I'll walk you through it. So for Palantir, one of the things is I didn't want to go too far behind in revenue because it's really not like it's really not, it doesn't talk much about the future when you go back, but you can look at the last 3 years of revenue, which are the only ones that I have: 64, 84, and 100%, which is their free cash flow growth. From this, you're talking about 83% average growth, and their projected growth rate that I put was 40%. And the reason why I put that is because do I think that at their 9th year they'll still be growing 40%? I think it's possible because they've mentioned a lot, they have a tremendous amount of inbound sales, and so that they have trouble matching the demand that they have. But like Palantir, as they keep retaining clients and making them spend more and more on their platform because they are actually like helping them win, they will be able to like get these new sales, keep making the retention rate, like the clients that they already have, spend more money with them, etc., etc. And so I really do believe, because the demand is so high on Palantir, that they'll be able to maintain it for a while. But if you just try to say, like, he said that by the end of 2028, and those are full year, right? That's not at the beginning of 2028. That's the end number of 2028 when it comes to future free cash flow. I put 42, 4.2, because that's their lower part of their projections, but they're gonna kill that. They're gonna easily do more than 4.2 because they keep beating on them. So they might do 5, and there we'd only have to grow this much. And they said, but by the end of 2028, 15 to 18 billion. That was said in the CNBC interview on July 3rd. That's 6 days ago. So this is the amount that I'd have by then, which is about half, slightly above half. We don't reach those predictions until 2030. Now, if they grow 50% after that or something, then they'll absolutely kill that. You know what I mean? So I just calculated 40% as a way to give them, as a way to be conservative, and only for a 10-year period, right? So I think that after that, maybe you go down to like 15 and 20 or whatever if you want to be conservative. But I do really like 40% as a projected growth rate here for the next 10 years, because it takes so long to reach what they think they'll reach in 2028. And then after that, the growth is like kind of free to a certain extent. So that's what I believe. There's that. I put perpetual growth rate, so that's the market economics growth. That's like a standard number. And then for the discount rate, I calculated it with the weighted average cost of capital, which in the case of Palantir, it's easy because they don't have any debt at all on their balance sheet. 0 debt on their balance sheet, which is insane. So you only have to calculate the cost of equity, and then you calculate this. You calculate the risk-free rate plus the beta of the company, which you can see on Yahoo Finance. Here is 1.56. Beta 5-year monthly is 1.56 time, but it's more than that. It is more than that recently, but overall using 1.56 as a long-term one is perfect. Market return 9% on average, and so then you calculate the cost of equity, you get that. That's a discount rate. It's bigger than like for the normal company because their beta is so big. So you have that here. Then you calculate. I'm not gonna walk you through the DCF. I don't know why I'm doing this right now. Okay, what you get is the sum of free cash flows of the. You actually use the price value of free cash flows. You don't use the actual cash flow because you'd have a lot more. You use your cash and cash equivalents that you can find on your Yahoo balance sheet. In assets, total assets, you click. There's zero debt, so the equity value is this, and they have 2.3 billion outstanding shares, which gives you a DCF price of $327.93. That price. Right now, this company is trading at $126. Okay. So obviously it's trading at a tremendously IP ratio, but I do believe in this company's ability to grow because of the technology that they have. It's kind of like investing in Micron. Oh yeah, Micron has chip memory. Dude, Palantir is the application layer, and Alex Clark keeps saying this. Oh yeah, sound like mean mugging journalist on CNBC, but it's true. There needs to be an application layer that guarantees the safety of the data. You can't just use Claude. Claude has a leak because it's an open model. Leaks because that's happened before, that Claude has had a leak with their code and such. So you're talking about the application layer that's needed, and there's no application layer that can compete really with Palantir at this level. You have ServiceNow that is very good, but ServiceNow operates more so as an IT company, and it's for tickets, IT tickets. If you have problem with your computer and such, and so they resolve it. It's gonna resolve by itself. Palantir is so much more. How can you say this? It's a company that operates in any industry. It operates in government. It'll operate with like a transportation company, logistics company, outside as a corporate company, and the people are spending more and more money on it, which is insane. They're not charging for AI credits like these other companies are trying to do, because AI credits, and Alex Karp has said that AI credits is kind of like a proof that it's not working well, which I find that very interesting, and I kind of agree with him to a certain extent. I think that a company that operates, look, it's coming back here. Yeah, I think that a company that operates this way, that has been giving the result that companies want, to the point where they're spending 50% more money than they were the prior year. Well, okay, they were spending 128% more. Now they're spending 150% more. But so it's not a 150% increase over the year prior to it, but customers spending more and more money on it. They have a crazy level of stickiness for their current clients. 25% more than ServiceNow, which is at a 98% retention rate on a dollar cost basis. They've beaten on 11 consecutive quarters. And as when you look at the DCF, they have zero debt. They have no debt at all. Look. Let's move it. All right. Here goes nothing. Okay, they have a total debt of two. I'm so confused as to what these numbers are. 229 million. Okay, they do have that. Okay, they do have that. They do have a tremendously small amount of debt. I'm sorry, I looked at it recently and there was nothing. Also, you can hear the camera on the back. Repayment of debt, anything here. But the amount of debt that they has is pretty much zero, okay? Which makes it a super like interesting company because it doesn't have like the ability to be so liquid and have, you know, you're talking about billions of dollars of free cash flow, 8 billion, and you have debt that is completely that is nothing compared to it. It's like you don't got anything. Like, when you look at it, like I could add the debt and it could go down to 321 or something like that. But because if you look at the total debt, cost on debt, tax expense, you go cost on debt and you have like 229 2, you add that, then you bring it out. Let's see this. Yeah, see, that's what happened to it. So let's not even dwell on that. uh yeah, so Palantir is just a company that has phenomenal growth, no debt. uh it trades expensive, that's the problem. But the thing is that it should trade expensive because it's such a company with a phenomenal product, where and it has tremendous revenue growth, where it's like, on a forward basis, how expensive is it really? Like, I think it's something like 80. Okay, that's still a lot, but dude, at 80, with another expected 85% growth the year after, from what the CEO has said, you're kind of looking at it like, okay, well, I do it. How do I see the? It's in statistics, yeah. Okay, forward P of 90, which it is still very high, but look how high it's traded. Look how low it has. Look how much it has decreased since then. And the company was still doing phenomenal. Now it's not. Okay, it's trading at 91. It was trading at 113. Now it's at 148. A forward, it was trading at 113 a forward. Now it's trading at 90. Anything below 100 a forward, I'm fine with, because I think this company will continue to grow for years and years and years. And so it's going to stay ridiculously high. I think it will become a $1 trillion company in the next 5 years. That's what I believe. I like, because of valuations, obviously, but still, I think, it was at 429 billion of worth here. And when it trades at like 400 times P, I can't, like, I just don't see how. I don't like this. But since then, it has grown so much that the value of the company dropped by like 1/4, but the PE has dropped by over 2 times. So that's what's interesting to me. This company is growing so much that like the valuation is becoming more and more reasonable. But you're never gonna get a reasonable valuation on Palantir for the next couple of years, for sure, because it's gonna keep growing like crazy, and so you can put a premium price on it. And they have a phenomenal product. So this is what I think. I gave you the reason why I believe so. They have an NVIDIA partnership for corporate companies with data sovereignty requirement, which updates their total addressable market. And when you look at the total addressable market of Palantir, You're looking at every single big corporation with a lot of data that wants to turn it into actionables, use AI agents and such to the highest level possible. I don't think these other companies that are integrating AI agents are able to compete with Palantir. CRM, Palantir isn't going to take CRM because it's not a customer relationship management company. And it's not going to take ServiceNow because it's not like an IT specific. But for everything else, Palantir, like I say everything else. Okay, maybe not everything else. Like you can still have a Workday, like Oracles and such for finance and accounting. But when you're looking at a company to help you in logistics and such, and operations that are beyond the like helping the employees, if that makes sense, then you're talking about Palantir. Because finance are related to like payroll of employees, IT is for employees, and the other one, CRM, is for employees to use. But when you're talking about every company, every product is for like the employees to use, but I'm talking about product that is outside of those three specific companies and these three specific roles. Then everything outside of that, you're talking about Palantir. Palantir could overtake all of these. And by the way, it's already more valuable than all of these companies. It doesn't make as much money yet, but its growth is so much higher that it will in the next few years. It will completely overtake them, and I think Palantir is going to be. I think Palantir is going to absolutely kill it in the US, and then it might translate to Canada, where I am, and a lot of these other companies, a lot of these other countries where it can continue to grow, because it has a foot in Europe with through Ukraine. Now Ukraine's in a specific position where they need Palantir for non-commercial reason, let's just say, but I do believe in it being a long-term like a company that's going to keep growing as AI gets better and as the need for solutions that work in data that has like sovereignty situations and such. I think Palantir will keep dominating these. That's my thesis. Thank you for watching the video. Sorry, I didn't put it super well together, but I had to film a video because it had been a bit. I worked a lot on my thesis for Palantir, my due diligence and such. So I'll keep doing videos. I'll try to do another one this week. Thank you for watching, and subscribe to the channel, comment, let me know what you think. Till next time, guys.